Hey, welcome investors to the 40 Finance channel. I continue to read a strong bearish sentiment across the market, not only from the television analysts, but also a lot of people on social media, YouTube, and etc. talking about selling all of their stocks, getting out of the market, selling everything, selling crypto, all these things to try to take safe harbor in the face of potential interest rate hikes or, probably likely interest rate hikes at this point. And then the concept of inflation running wild and just destroying the stock market. And I certainly agree that it makes sense to watch interest rate increases, inflation percentages, oil prices, all those things certainly wrap into the broader story. But at the end of the day, we're talking about stocks here, and stocks are based on revenue growth and earnings growth. And for me, when I look at the potential out there from the U.S. consumer, not only for, say, the second half of 2022, but the out years beyond that. So for me, I find it very interesting that a lot of people are talking about selling out of all their stocks, going 100% to cash, waiting for the big crash so that they can buy everything on sale. I think instead of selling everything, we need to be thinking about buying a lot of things, particularly stocks that have gotten beaten down, whose 5-year future forecast looks absolutely awesome. And it doesn't mean you have to spend all your money and go completely out of cash into the market. But certainly buying along the way right now on red days looks to me like it makes a lot of sense. Now, because I think the media has done an incredible job covering all of the bearish sentiment and bearish rationale that's out there, I'm just going to spend a couple minutes on this video showing you some of the bull cases to think about on the flip side. And the first would be the unemployment rate, which is represented here over the past 10 years. So starting back in 2012, you had an 8.3% unemployment rate. And right before the pandemic, we were at 3.5%. We all know what happened then. And right now, though, December, we were at 3.9%. Took a little bump up in January to 4%. But the bottom line here at 4%, we're in a great place from an unemployment standpoint. This is not a recession where people cannot find jobs. As a matter of fact, at least in my area, you still have shortages across the board. You still see Starbucks being closed in the morning. You still see restaurants only doing partial seating because they don't have enough servers. You drive down the freeway, you see billboards everywhere for hiring healthcare workers, warehouse workers, everything you can imagine, all that competition for workers, and we're still down here at 4%. I think employment is in a very good place, not to mention that here, at least in Ohio, in January, you don't even have a ton of seasonal labor going on, right? Because it's so cold out. You don't have the landscapers with their jobs available. You don't have festival workers, concert workers, all those things here in the Midwest. Those type of employment opportunities open up massively as soon as the weather breaks. All right, next let's take a look how COVID's trending. We know how much impact that's had on offices and businesses being open and closed. And we had the huge spike, right, over the holidays, after the holidays. We've all well aware and seen the headlines. And now, though, you're trending, let's see, February 12th. You see how the new cases are trending down. 7-day average is trending down. So new cases are looking good. If you scroll down here to hospitalizations, which is a chief concern, you can see the chart. And here on February 11th, you're definitely taking a decline in hospitalizations. And it looks like intensive care, which is the bottom little purple hill here, that's coming down as well. So positive news on the COVID front. How about air travel? TSA checkpoint travel numbers. As of yesterday, 1.8 million passengers checking through TSA. Last year at this time, about 50% of that level. And you're still not back to 2020 or 2019 levels quite yet, but you're getting much closer, 1.8 million versus 2.2 million. And let's just pick another day here just for fun. How about February 3rd? You were 1.3 million versus last year, 700 some odd thousand. And back in better days, 2.1 million and 2 million. Now, yes, we still have a lot of room for air travel to get back to 2019 levels, but I would say that that's a tailwind more than anything of untapped economic potential. And you just eyeball these two columns here, we are up significantly over 2021. And speaking of air travel, even Boeing's back to selling planes again at a reasonable level. This article here on SeekingAlpha, during the month of January, Boeing received 77 orders consisting of 55 single aisle and 22 wide body orders. Now, this video isn't about Boeing, but check out some of the names here. American Airlines ordered 23 737s. Southwest Airlines ordered 12 737s. Unidentified customer ordered 20 737s. Then we got Qatar Airways down here. They ordered a total of 16 777s. And the purpose of showing you these Boeing airplane numbers is business is good in the airways. And when you see companies like American Airlines, Southwest Airlines, all these different companies putting in orders for planes, I would say that's very bullish for the travel industry looking forward. Now, of course, there is something to be said for the inflation concerns that prices are going to rise and take away from people's income. But generally speaking, certainly over the past 10 years, wages and salaries have seen a huge spike since pre-COVID times. And you got to keep in mind too that this is more or less a cumulative chart for people who stay in the same position for a number of years, right? So if in 2021, I'm just kind of eyeballing here, if the wage and salary growth got up to 15%, and yes, it's coming back down to under 10%, but if you got the job when it hit the 15%, you're also getting the cumulative additions each year after. We talked a minute ago about all the job offers that I personally see becoming available, and the fact that you still have 96% of the nation fully employed. Now you factor in some wage growth to add even more fire to the jobs competition. And I would say if you're a worker in the United States, things look pretty good, even with some higher prices being felt on the inflation side. All right, but what about stocks in general? How are they doing after going through basically a meltdown since around Thanksgiving time? Well, here we are in the midst of earnings season, and it's a great time to put your ear to the ground and try to figure out how are companies guiding for the future, right? How do earnings and revenue growth look into the future? And one of the ways that we can do that is through this upgrades and downgrades tool that they have on SeekingAlpha. I'm choosing the last 30 days here to try to make sure we get everybody that has reported their earnings. Quick call out too, if you're interested in learning more about SeekingAlpha, my affiliate link is in the description, saves you a significant amount of money on a 1-year subscription. Okay, so I started on the negative side because I want to show you something, right? Ultimately, the most negative you can get on a stock is strong sell or sell, right? You're basically telling your constituents to get out of this stock. It's going nowhere. Now, in that camp, we might only have a dozen names here. And of those dozen names, we have a couple that are actually duplicates, just by the way that this is sorted. And I'll say furthermore, of this dozen or so, I don't even recognize most of these companies. Besides down here, you got Clorox, you've got Aurora Cannabis. I've heard of them. Mizuho Financial, I've heard of them. Barclays. But think about who's not on here, right? I don't see Google, Disney, Home Depot, Target, any of the big names in the United States. I don't see these companies being represented on here. There's no one on the chip side. I don't see anyone on the medical side. I guess some of these could be medical and I just don't recognize them. And this is all of the sell down ratings that have come in over the past 30 days. Now let's flip the script in terms of upgrades. Who has gotten the most upgrades here? All right, and for this one, the list is so long that for the interest of this video, I'm just going to sort by market cap, and that way you can see things, at least for the bigger companies. So we have Ford getting a number of upgrades from hold to buy, which is even kind of ironic because I believe the Ford stock went down here recently. TJX from a buy to a strong buy. I'm not familiar with this company. Colgate Palmolive, obviously huge consumer packaged goods, hold to buy. Moderna, hold to buy. Marvell Technologies, buy to strong buy. But just scrolling through this list, guys, there is a lot of stocks out there that are getting upgrades, and we're in the midst of this earnings season right now. So all of the things that are being reported, the guidance, etc., is coming out and resulting in upgrades in the outlook for lots of stocks that you know. Now, of course, we've seen plenty of stocks that have gotten a haircut as well. Now, I, for one, believe that the haircuts that took place between, let's say, Thanksgiving and this most recent earnings season, I call that a valuation haircut because the stock market was running very, very hot in terms of future valuation and expectations. Now I think that we are in a process here of getting down to, let's just call it fair value or reasonable valuations for a lot of stocks that are out there. So in my opinion, things are actually just settling out in the stock market. Valuations are being reconsidered, and the winners are going to win and they're being rewarded, whereas maybe the ones that have projected too high of a growth curve, they'll be brought down a little bit. But that's a significant difference than a bearish market, an impending stock market crash, sell all your stocks, stay in cash. That is a doom and gloom story that, quite honestly, I'm not seeing. All right, investors, so that's my high-level opinion on where the stock market is right now. I'm very comfortable in this environment, to be honest with you. I see opportunities across individual stocks, and frankly, I see opportunities against broader indexes. You know that I've been buying the QQQ. I don't buy 1 million shares a day. I just pepper in mostly on red days, and I think the outlook, particularly for the next 2 to 3 years, looks very, very solid right now. All right, let me know what you think of the stock market right now. Are you interested? Are you in nibbling at stocks? Are you still holding out for a bigger discount? Don't forget to, in the description, there's that discount for Seeking Alpha. So take advantage of that. It's a great service. As always, please give the video a like, share with your friends. I appreciate your support. We'll see you on the next video.